Hey traders, David Frost, LazyGapTrader.com. In this video, I'm going to show you a couple of examples of morning gap trades from this morning that worked out picture perfect. Before we do that, and you see a sneak peek of one of them on the screen right now at SNE, Sony Corp, we'll get back to the chart in a second, explain exactly what happened. First, let's describe exactly what gap trading is. When traders are looking for opportunity, we look to stocks that are moving in the morning, stocks that are gapping higher or lower at the opening bell. That's where the opportunity is found, and it's found by those traders that can identify a specific price level where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. In my course at LazyGapTrader.com, traders learn everything they need to know in order to trade the gaps successfully. Which stocks does this work the best with? What are all the criteria that we're looking for, such as what type of volume do we look for? How much of a gap higher or lower do we look for? How much of a profit target are we expecting? How much of a stop loss limitation do we give these stocks? There's a whole lot more, but most importantly, how do you calculate the specific price where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction? That's the holy grail. That, along with all the other criteria, is taught in my course at LazyGapTrader.com. Now, the other thing I do is give traders an opportunity to get my gap trade sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the market's even opened for business. Here's a copy of the email that went out to traders this morning. As you can see, it arrived at the inbox at 9 a.m. and that's Eastern Standard Time. This morning, we had 7 potential gap trades on the board. Now, out of this list of 7, 4 of the stocks hit their specific price levels that we calculated before the market even opened for trading. 3 of them did not. When stocks do not hit their specific price levels that we calculate, it's off the board, it's a no trade. We only want the highest probability trades on the board. Let me run through the 4 that did hit their levels, then we'll get back to the charts and see exactly what happened. The first one was OLED, O-L-E-D, gap lower. Support levels are 106.93, and then I gave 2 secondary and tertiary support levels. They didn't hit. The first one did hit. Stop and profit target is about 50 cents to $1. The second one was Facebook, gap lower. Support levels are 173.10, and then I gave a second and a third support level, did not reach those levels. Stop and profit target is about 50 cents to $1. The third one that hit its level today was Sony Corp, SNE, gap lower. Support levels are 47.71, and then I gave a second level, didn't hit. Stop and profit target is about 30 to 55 cents. And the fourth trade that triggered today was Mazer Robotics, MZOR, gap lower. Support levels are 63.77. That's the level that hit. Stop and profit target is about 35 to 65 cents. Keep in mind, the reason why there are multiple support levels and multiple resistance levels on these stocks is because there are plenty of days where we get multiple trades out of the same stock. Each of these support levels or each of these resistance levels are separate and independent trades from one another. Therefore, we do get multiple trades at different price levels in the same day, and it does happen quite a bit. The first one we'll look at is OLED. This stock was getting hit pretty hard at the opening bell. The stock closed yesterday over $124 a share. The stock was trading lower at the opening bell and continued lower. As you can see, the stock came into and broke through the 106.93 level. However, there's a method to the madness, and there is a specific reason why I wanted to bring this chart to your attention. It's a good learning opportunity for those folks that have taken the gap trading course and just want a little refresher. The stock came close to the level. The stock made a low in this particular candle of $107.10. The level was 106.93, but the stock had more than $1 bounce all the way up to 108.30 without touching the level. That changes the trade. It changes the importance of 106.93. Had the stock come into 106.93 on that specific candle, we still would have gotten more than $1 bounce. However, we don't want the trade at that price level the second time around. Traders that have taken my course know exactly what to do with this trade, and more importantly, why they need to do it. Even though the stock traded lower than 106.73, you can see how the stock rallied back towards the end of the day. Even in the middle of the afternoon, you can see how the stock rallied up to the 106.93 level and then was rejected. That goes to show you the importance of that level. The stock traded within pennies of that level early in the morning, bounced off that level, even though it didn't touch our specific level to the penny. But you can see the importance of this price area. These are some of the things that traders learn in my course. Facebook is another one today. Facebook closed Friday at 185.03. The stock was getting hammered at the open on some news that broke over the weekend. Early this morning, we identified a level of $173.10. What happened? The stock traded into that level, making a low of $173, just 10 cents below our specific price level given out before the market even opened for trading. And by the way, folks, keep in mind, these are the same price levels that any trader that's taken the course is able to calculate on their own each and every day on all these stocks. Now, Facebook didn't have a tremendous bounce, but it gave us what we were looking for. It made a high of $173.87, more than the 50-cent minimum profit target we were looking for. Now, obviously, the market overall was getting killed today. Facebook was getting killed. The stock rolled over and went lower, rallied back to that same price level. Goes to show you the importance of that price level. Actually rallied back twice, was rejected here, got through it and traded around it here, but we had our profit, we had our trade earlier in the morning. The trade is over and done. The third stock that hit its price level today was Sony Corp, SNE. You can see what happened. The stock made a low of $47.71, exactly the same price that was given out this morning and exactly the same price that any trader that's taken my course is able to calculate on their own. That was the low of the day. This happens a lot. The stock finished at 48.33, giving us more than the minimum profit target we were looking for. Another positive trade. Keep in mind, we've had positive trades. We've had profitable trades. The market's getting killed. Most market participants are losing money on a day like today. The last one that hit its level, which is the fourth stock, MZOR, Mazer Robotics. The stock closed Friday at $68.64. The stock was getting a haircut at the open. What happened? It traded right into our level of $63.67. That's where the stock began to find support. The stock made a high after that of $64.52, giving us more than the minimum profit target we were looking for. Stock rolled over a little bit and rallied back to close above that level. You can see the importance of these price levels. Here's what's important, folks. Traders learn the why behind this strategy. Once they understand the why behind this strategy, why does it work? Why are we able to find support and resistance areas, support and resistance prices for stocks in such a precise manner? Once traders understand why this works, they have an entirely different outlook on trading. They have a different confidence when taking trades because they have a certain expectation of what should happen at these price levels. We're removing the guesswork from trading. You remove guesswork and add back in confidence, and you turn profitable, and you begin making money in these markets, and you become a different trader. Learn this strategy. It's a strategy you can use each and every day for the remainder of your trading career. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.